This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour.
There was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today.
U.S. stocks and bonds unmoved as the Fed votes 10-2 to hold rates and signals a cautious outlook. The dollar rebounds with the Treasury Secretary touting a strong currency. And a massive day for tech earnings. Tesla, Meta, IBM gaining on strong numbers and AI plans. But investors worry Microsoft's AI investments may be slow to pay off. And in the battle of Asia's chip giants, Samsung and SK Hynix each report record results as the AI wave shows no sign of breaking.
Investors have plenty to digest this morning, including those tech earnings from Asia, but not to mention, of course, from U.S. giants as well. And, of course, a very much expected rate hold from the Federal Reserve. We are seeing the Fed perhaps focusing a bit more on the stabilizing job market, which has been seen by investors as leaning perhaps a little bit more hawkish. We sent the dollar a little bit higher during the session with the presser from Fed Chair Powell. And already we had seen a lot of movement in the FX space. Remember Secretary Bessent coming out and emphasizing the strong dollar policy and reiterating that they're absolutely not intervening in the FX space in order to support the Japanese yen. So that actually sank the Japanese yen, currently holding at that 153 level against the U.S. dollar. Take a look at Nikkei futures pointing to the upside after 2 sessions of gains already. And we are continuing to watch the equity space very closely because we don't only have those earnings from big AI spenders, but also the likes of ASML, for example, that has suppliers here in Japan, including Lasertech, Advantest, and of course we'll be watching all of those peers. But it's that story about tech, right? The spending around artificial intelligence. Take a look at these stocks in South Korea because Samsung has just reported fourth quarter net that beat estimates, and we're seeing that upside in pre-market trading. And remember, Samsung was trying to compete with SK Hynix when it came to sending those HBM4 deliveries to NVIDIA. They're saying that they're on track for those deliveries in the first quarter, so that's being really well received by the markets, which has seen already the Samsung stock gain more than 100% since September. And we have also seen the memory business reach another record for Samsung. And that is a very interesting point because all of that AI spending has veered the focus away from traditional, conventional NAND, RAND, and that's actually what's giving immense pricing power for the likes of SK Hynix as well, that reported record earnings in the last session as well.
Yeah, Shery. And we are also tracking, right, those after-hours moves in the big tech names from the U.S. Meta going the other direction in terms of a surge versus what we're seeing in Microsoft. After its revenue, its CapEx beat, Microsoft sinking even after the revenue beat. And then Tesla also in focus after its first annual sales decline ever, and then announcing $2 billion in investment in XAI. But all this is coming after the Fed Chair Powell spoke, and we saw, as you mentioned earlier, that balance of risk perhaps a bit away from the labor market now. And then we saw those two dissenters, right, Myron and Waller. And then this idea that Waller now having dissented ups his chances of being the next Fed chair at a time where Bessent has, of course, been talking about still having the strong dollar policy. We saw the dollar pick up overnight. And against this backdrop, Powell had some advice for his potential successor. Have a listen.
Lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is, stay out of elected politics.
The policy and the politics. To help us make sense of all this, let's cross to Washington. Our Federal Reserve and economy reporter Enda Curran joins us now. So, there's this idea out there that Waller now having dissented means maybe a bit more odds of him being picked as the next Fed chair. I mean, is that a fair assessment?
Well, we can only take at face value. You know, Governor Waller has been somewhat bearish on the labour market for many months now. In fact, he's been credited for getting his calls on the employment situation correct ahead of the curve. He was pushing for rate cuts last year ahead of the rest of the policymakers. So, you know, he's been consistent on that side of things. Obviously, though, the optics around Governor Waller are that, of course, he's on the final four to become potentially the next Fed chair, to be nominated by President Trump if that's who he chooses. Obviously, President Trump wants the next Fed chair to be seen as somebody who agrees with him that the economy needs lower interest rates. So it's at a critical moment where you wouldn't want to be seen as being too out of step with the president on that. But, you know, that's all. There's an element of conjecture and speculation in that, because we haven't heard from Governor Waller yet. But what we do know is in the past he's been both bearish and proven correct on where the jobs market is headed.
On the state of the economy, and we saw a little bit of a tweak when it came to the statement, especially on the risks around the job market and inflation being roughly balanced. Are we correct in understanding that they might be leaning a bit more hawkish then?
It certainly was something of a shift, maybe a subtle shift. I mean, acknowledging that the data in recent weeks since they last met, Shery, has been better. I mean, the economy is doing well in terms of GDP growth. It's expected to quicken again over the months ahead because of the tax cuts and various other measures. And employment perhaps stabilizing. That's what the statement today said. But at the same time, Fed Chair Powell in the press conference made it clear, in fact he was at pains to make clear, that he wouldn't want to overstate the kind of stabilization they are seeing in the labour market. So I think a lot of Fed watchers were taking away from it. On the one hand, sure, they're on hold, Shery, for now, probably not looking to cut near term unless, of course, the data changes. But at the same time, they're keeping their options open. They're not signalling they're done, that they're on pause, that the next move might even be a hike, for example. They're saying they're going to take things 1 month at a time. Plenty of Fed watchers are making the point that it could well prove that there won't be any more cuts in Fed Chair Powell's term as chair, which ends in May.
So perhaps a bit hawkish, and that's helping the dollar as well. At the time when Bessent is talking about the U.S.'s strong dollar policy, what is the Trump administration's policy on the dollar now?
Well, we've had, you know, a whiplash few days on the dollar. Remember, we had news late last week that the Treasury was potentially considering intervention into the currency markets to support Japan's yen. Then, of course, we had comments from President Trump yesterday making clear that he's quite comfortable with the dollar's recent weakness and the sell-off, down about 10%, I think it is, on a trade-weighted basis, over a dollar index down about 10% over the past year or so. And then you had Treasury Secretary Bessent coming out today and, you know, on the one hand just restating what is kind of well-versed, which is that the administration backs a strong dollar policy. This has been the typical line from administrations in the US for many years now, and this under President Trump, they've continued that. And of course, there's a tricky balancing act here, because on the one hand, President Trump may welcome aspects of the weaker dollar, which in terms of what it might do for promoting growth in some sectors of the economy. But of course, as Treasury Secretary, certainly he wouldn't want to see a disorderly weakening, a disorderly selling of the dollar, or any kind of message to the rest of the world that it's a green light to go ahead and sell your US dollar assets either. So clearly trying to balance the messaging and all of this, calm nerves, and that seems to be what Treasury Secretary Bessent has succeeded in doing today in terms of turning around and putting that rally back under the dollar after he spoke.
Fed Reserve and economy reporter Enda Curran there with the latest on the Federal Reserve. A very much expected rate hold coming from Chair Powell. But of course, we're also watching some of those tech earnings, not only from the United States, but also from South Korea. And the latest from Samsung has been that fourth quarter net beat. And Avril, very surprising, perhaps not surprising, unsurprising, given that we're expecting very strong numbers on the semiconductor side of things. We're now seeing that the chip unit actually had a 5-fold profit gain. That's huge. But what was interesting to me was also that their memory business is doing fine, and they were actually recording another record, given, of course, how AI spending has been sort of cannibalizing the supply when it comes to those conventional NAND and RAM chips.
I mean, when it comes to memory demand, I think for the likes of SK Hynix as well, it's doing more than fine, right? We had the likes of Bloomberg Intelligence expecting that they can continue spurring things along because of this memory pricing. You look at SK Hynix and Samsung Electronics, they're really in the driver's seat when it comes to the memory market. And we're also keeping watch on SK Hynix because it's cancelling those treasury shares to the tune of about, I think, $8.6 billion next month. So we'll watch how they start the session in the next hour. But to your point about digesting all these big tech earnings, Tesla's profit also was in the spotlight after flagging a $2 billion investment in XAI. Then we had Meta's outlook topping estimates, and this supported its AI spending plans. But Microsoft fell after spending more than expected. Let's bring in Bloomberg Intelligence Global Head of Research, Mandeep Singh. So, Mandeep, maybe let's start with Meta, because the past couple of quarters, it was kind of dogged by investor concerns that it was spending too much and then maybe not seeing that payoff yet. Have those concerns sufficiently been, allayed?
I don't think so. I mean, if anything, they are raising their capex. In fact, next year, in 2026, they'll be spending almost 50% of their revenue in capex. So clearly, they feel they have, enough in terms of the own model that they're building to launch new products around AI agents, and they are seeing that benefit in terms of their core business. The video time spent on Meta's family of apps increased almost 30% in the US. So from that perspective, it seems like AI spend is helping them in the core business, but there is no doubt you have to take a leap of faith as an investor that, all that capex is going to result in new products that will have a lot of traction in 2026.
Yeah, that leap of faith, how significant it is for Tesla to be investing $2 billion in XAI?
I mean, look, all these companies are trying to, develop their own foundational model, which is frontier like OpenAI, Gemini, and Anthropic. And they feel once they have that, they can deploy it across, all the businesses they have. So in the case of Tesla, it would be deployed as an assistant in the cars and, the humanoids that they are developing. So at the end of the day, the intelligence layer is what will underpin a lot of the revenue opportunities going forward. And we have seen that in OpenAI and Anthropic's ramp in revenue. And these companies feel, Meta and Tesla, that if they are able to get to that level of intelligence, that's going to drive a lot of their growth going forward.
What about Microsoft? I mean, we're seeing in terms of the stock market reaction, it's really quite different from Meta, despite that capex spending.
I mean, look, in the case of Microsoft, there are puts and takes. The core Azure business, yes, it grew 39% instead of 40% last quarter, but that is not a meaningful deceleration. So it's more about the other part of their on-premise business, which everyone feels will get disrupted as these AI agents really take off. And that's where the concern comes from, is the dependency on OpenAI, the fact that Microsoft doesn't have their own large language model and it relies on OpenAI, and the fact that some of their legacy business will come under pressure because of the rollout of these AI agents. But their print was very solid, and it was just a case of expectations being higher for Microsoft than they were for Meta.
What are you watching for in the next few set of earnings that we're going to get, especially the likes of Apple? We also have NVIDIA, of course.
Yeah, look, if there's one trend that's already clear, is AI infrastructure build is going to carry on, and all these companies are investing heavily this year. So the question is, if Meta did well in ads and they are guiding to accelerated top-line growth, what does that mean for Amazon ads or YouTube ads? And look, at the end of the day, ads grow at low to mid-teens. So if Meta is guiding for almost 30% growth, somebody is going to grow slower than the overall ads growth. And that's what I'll be looking out for.
Mandeep Singh, always good to get your insights. Bloomberg Intelligence Global Head of Research. Coming up on the Asia trade, with the Fed outlook and tech earnings setting the tone for markets, we'll speak with Defiance ETFs and Invesco about their investment strategies. Plus, Counterpoint Research gives us their take on the AI demand and China's players. We have much more ahead. This is Bloomberg. Take a look at how we're trading pre-markets for Samsung and SK Hynix. We're seeing upside for both stocks after Samsung just minutes ago announced fourth quarter net beat estimates. Their chip unit reported more than a five-fold profit gain, and they also announced a $2.5 billion buyback. They're going to be delivering their HBM4 chips in the first quarter. As interesting as the memory business, also posted record quarterly revenue and profit. It's really that AI demand cannibalizing the production of conventional memory, so much so that even Tesla's Elon Musk is speaking right now, saying the memory chips are the bigger constraint than AI chips. We have seen that also help SK Hynix, which has also reported their strongest quarterly earnings ever.
Yeah, and Shery, to your point, I think whoever is making these chips, they are really the ones that are the top dogs in this day and age, right? So you have even the likes of Musk talking about Tesla needing to build a semiconductor factory. We are still looking at a pretty mixed picture as far as big tech names are concerned. The likes of Meta, IBM, they're surging in the after hours. Microsoft going the other direction. And this is despite both Meta and Microsoft capital outlays topping expectations. Let's get more perspective on markets. Joining us now is Sylvia Jablonski, CEO and CIO at Defiance ETFs. Sylvia, good to see you. Talk to us first about whether the capex plans from these big tech names, along with these worries about memory, perhaps a bit of a headwind. How is that playing out in your faith in these AI tech stocks?
Well, hello, and thank you for having me. Well, I think, it's a tale of two cities a little bit, right? Meta got rewarded for their spend and Microsoft didn't. And I think, part of that is also that investors were waiting to see what Microsoft did in terms of actually applying and wrapping the AI into their various products quickly enough so that it can be consumed. And so the big story here is what will happen with all of this spending, right? And I think that in earnings seasons and quarters to come, what we want to see is the actual ROI on this AI spend. But what we are seeing is that the AI infrastructure continues to grow. So what started as just a chips play has now, fed down into the Mag 7 companies and is now broadening out. If you look at, we were talking about the tech earnings today. If you look at IBM, for example, right, they had a very favorable beat. If you look at GE Vernova, for example, they increased expectations for future revenues. And, kind of why is that, right? And I think because on the IBM side, again, it's a tech story. They're investing heavily in quantum. On GE Vernova, it's this AI infrastructure. So this whole trade of AI automation, quantum machine learning is continuing to grasp the attention of markets. And we just want to see what the ROI is going to be in quarters to come.
When it comes to tech, though, it's always about what is the next trade, right? And we are seeing that kind of broadening out, to your point, but also to the memory space. Those are the ones that have been doing well as well, I think, past couple of months. Do you see more upside in that sector?
Yes, there could certainly be upside in that sector as well. And the reason why is that, supply is lower than demand right now, right? So you have all of the ex-mag sectors, the S&P 500 minus the Magnificent Seven investing in this, and they can't get their hands on these memory chips quickly enough in order to meet their own AI goals and their own AI infrastructure build-out goals. And so I think that AI infrastructure play is going to continue to pan out for investors. Excuse me.
Sylvia, are you okay? You can drink a cup of water while I ask you the next question, but I really am curious about your thought about what will really be the catalyst for the next few weeks, given that we now have the very unsurprising Fed decision perhaps out of the way. Was that sort of what you were looking at, that we're not really going to get much insight or much surprise when it comes to their economic outlook. But what did you think of the fact that Fed Governor Christopher Waller also actually decided to dissent and vote for a cut?
Well, I think the Fed announcement was pretty much what the market was expecting. But the good news is that the rhetoric behind it is that, the economy is stable, continuing to expand. Unemployment numbers are staying steady. Inflation is kept at bay. And all in all, we're in a good position. And if you look at the earnings announcements, so far coming out, and then the last couple of quarters, when we've had these higher rates, pre-cuts, these earnings numbers have continued to grow, and we're looking for double-digit growth again this year. So, you have this tailwind of a strong economy. You have a Fed that has cut rates, has paused for now, but is, the direction that they would likely go if inflation continued to come down and we saw any kind of weakness in labor markets would be to cut rates further. Corporate earnings are great. And AI, again, is one of the big reasons for the GDP growth and the continued potential for GDP growth this year. So I think all in all, hearing that the Fed was pretty positive on the economy, on jobs, on inflation, and on economic stability is what the market was happy to hear.
And of course, we continue to have a lot of talk around the strength of the dollar. Does the Trump administration want a strong dollar? It was a weaker dollar. Does that change your calculations around your investments, especially when you're looking at some of these big multinationals with lots of business overseas?
No, I think investors will look to hedge their exposure through various vehicles and FX hedging in years to come and in quarters to come if they are expecting inflation in the U.S. dollar here. But I think that's been on the table for the last couple of quarters or so, and I don't really expect a big change there. What I do think, though, is that you are seeing this increase in different currencies as related hedges. For example, gold, less so than crypto. You've seen silver get a bounce. And so it's really interesting to see how some of these commodities are responding to that as well as part of the diversified portfolio allocation.
Yeah, Sylvia, to your point, we are seeing gold climbing above 5,400 with traders perhaps betting on a dovish Fed, that policy shift a bit down the road. I wonder how positive you feel about the commodities complex overall.
Yeah, I think, there are certainly spots in the commodities complex that are interesting. And what I would say is that a lot of the commodities that, again, go back into that AI infrastructure play, the picks and shuffles of everything that is needed to build out AI infrastructure, the energy and some of the commodities in that sector could potentially see tailwind and growth as this grows out. But I also just think that there's momentum. We talked about gold and silver. We've seen momentum because investors are piling into this. They're looking for this as, perhaps inflation hedge, diversified portfolio hedge, and they've seen performance there. And so I think in the short term, you could continue to see allocations to these spaces.
Sylvia Jablonski, always good to have you with us. Thank you so much, CEO and CIO at Defiance ETFs. We have more ahead on the Asia Trade. This is Bloomberg. Take a look at how commodities are trading. Of course, the expectations of what will the Fed do next is key, but we're seeing precious metals like gold and silver reaching record highs. It's all of the uncertainty, geopolitics as well, which is why oil is continuing to gain ground at the moment after President Trump posted on social media that Iran needs to make a nuclear deal with the U.S. or face military strikes. We have more ahead on the Asia Trade. This is Bloomberg.
Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation now.
Fed Chair Jay Powell speaking following the central bank's decision to leave interest rates unchanged. Of course, FX traders also passing the Fed Chair's comments, but also take a look at how we did see those comments from Treasury Secretary Scott Bessent fueling a bit of a reboot in the greenback. The Bloomberg Dollar Index at one point jumped by the most since July last year, but you are still seeing it looking quite firm on dollar versus the yen and against the Chinese offshore renminbi as well. Let's get more on the swings in the dollar with Bloomberg's FX and rate strategist David Finnerty. David, prior to Powell speaking, you were talking about how we'd be watching to see if there's potentially a bit of a hawkish shift that could help the US dollar. Is there any of that traders are watching, and is that their takeaway?
I think at the end of the day, it came in line with expectations, if we're honest. I mean, the market's not looking for a rate hike until maybe June, definitely by July, but you're looking certainly a few months out, and they're still basically looking for pretty much 2 by the year end. So Powell was in line with that, even though he said, yes, things are improving with the labour market. You know, the market goes, well, at some point, look, you will be replaced with someone more dovish, whoever President Trump nominates. So the market's going, look, we do expect more rate cuts down the line. So that really hasn't changed. The bigger impact on the dollar last night was obviously with Scott Bessent's comments on the strong dollar policy.
Yeah, how do you take those comments? They want the strong dollar policies, what Secretary Bessent said, reiterating what he had already said last year. And he also just emphasized that they're, quote, absolutely not intervening in FX markets to support the yen. Do you take that at his word's value, or could we speculate that although they're not doing anything right now, they could in the future?
Yeah, you said at the moment regarding the intervention, I mean, from what we heard, they haven't intervened. There was a rate check, but that's not actual intervention. So, you know, from what he said, the data sort of backs that up. Regarding the strong dollar policy, I think it's very important to look at how he nuances this. If you go back to what he actually said on Bloomberg July last year, he said, again, he commented that the US has a strong dollar policy, but he says that's got nothing to do with the price of the dollar. It's more to do with the key long-term fundamentals that will the dollar maintain its reserve currency status. And he's alluded to something similar again yesterday about the fundamentals, like, you know, President Trump's policies are growth related, and therefore that will be positive for the dollar, and therefore, you know, it will maintain its reserve currency status. So the key thing is that's really what he's going with the strong dollar policy. It doesn't say, I actually want the physical dollar to be stronger versus the yen, stronger versus the euro. He's sort of indicating, no, that's not really what I'm on about. So I think the market goes, when we hear strong dollar policy, the knee-jerk reaction is always, oh, he wants literally a strong dollar, but the actual nuances says that's not the case.
So reading between the lines, what are traders doing in terms of positioning then, in terms of the longer term trajectory on the greenback? How bearish is it coming through? Yeah,
but certainly people are trying to get short. Yesterday or the day before, we certainly saw a lot of people going to digital options for the euro to rally against it, for the yen to rally against the dollar. The Aussie dollar is another one that's getting some interest, because even though with Bessent's remark yesterday, please, you've got to note that the Aussie dollar ended the day stronger against the greenback, despite what Bessent said. So there's definitely a bias towards a weaker dollar. I think traders are trying to work out what's the best way to express that, because given the pullbacks in the yen and the euro overnight based off Bessent remark, you know, some traders may have been flushed out, some others a bit more frustrated, but I think they are still trying to look at the right level to short the dollar. And as I said, at the moment, the Aussie dollar has just been trending positive, whatever Bessent or whatever Trump has basically said.
Bloomberg FX and rate strategist David Finnerty there joining us from Melbourne. Great to have you with us. We continue to watch precious metals at the moment as well, because gold has now risen past $5,500 an ounce for the first time ever. I have to continue updating my notes right now because we went from 5,400, 5,300 in just the last few days. And all to do really with the expectations of what the Fed will do next, perhaps some expectations of more easing down the line. But let's get more on the outlook for the U.S. economy following the latest Fed decision to hold rates steady. That was pretty much expected. Joining us now is Jeanette Garretty, chief economist at Robertson Stephens. Jeanette, always great to have you with us. does today's Fed decision move the needle at all when it comes to rate expectations for the rest of the year?
Great expectations for the U.S. economy, perhaps? Not really. I don't think this changes much of anything. First of all, it was expected. Second of all, there was actually remarkably little discussion in the press conference. I was very surprised about the trajectory on interest rates beyond some discussion about the next meeting. So I think maybe everybody thought they knew what Jerome Powell was going to say if they tried to pin him down to the second half of the year. But there really wasn't a whole lot of substance there. And he did a rather interesting thing, in my view, which is to shine a light on some of the fiscal policy issues, some of the things that are bothering people in the U.S. economy right now, if you will, that do not have monetary policy solutions, only have fiscal policy solutions. So that's where I think he's saying that the needle is going to move, and he's comfortable with monetary policy where it is right now. That could change, as it always.
To your point, a little bit of that K-shaped economy that we're seeing, right? The wealthy getting wealthier. But also, I think a lot of that conversation was crowded out by the fact that we were really getting a lot of questions around the politics of everything, right? I have to ask you, what do you make of Governor Waller's dovish dissent? Does that sort of give us a Fed put in the months ahead if he were to become the next Fed chair?
Possibly. The only thing I made of it right now, actually, one that's a bit of a offhand remark, which is that he's the only Fed governor, that the current sitting Fed voting member who is being contemplated to be a future head of the Fed. So, he voted this way because perhaps he wanted to signal to various people that he, in fact, would be rather dovish. The leeway, the theoretical leeway for why he did that was in Jerome Powell's remarks. He did say that while he feels and while the majority of the board felt that they were very comfortably in the neutral range for monetary policy, the neutral rate of interest, that it was at the high end. So there could be, it's not out of bounds that Chris Waller could say, well, I think we could have cut a quarter point and we would still be firmly in the area of neutral policy stances. So that would be the cover for what he decided to do.
Investors seem to be just focused on the path in the second half for the Fed. I mean, you look at the way gold has popped, right? The expectation of a dovish shift. What is your sense of, in the first half, is it fair assumption that we're not going to see a cut?
Well, now you're pinning me down to time and date and magnitude, all of that stuff that economists love to avoid. I do think that there will be 2 cuts this year. The timing of it, I would see as mostly being in the second half, but could come in a little bit earlier. But my expectation is premised on an assumption that we will actually see some improvements in the inflation numbers because of the way that the numbers are calculated and because of other general trends in the economy. And I'm making a grand assumption that there won't be any unexpected tariff announcements. But if that doesn't happen, then I don't know about those 2 cuts, and we could have a very confrontational environment if inflation starts to go the other way. I don't see that right now. I think 2 cuts are in the mix. I'd see it starting at mid-year.
Okay, so a couple of caveats to those outlook. What is your sense of the dollar whiplash that we've been seeing this week and the overall negative trajectory for the greenback? How might that affect the U.S. economy?
It will have macroeconomic effects. It will have effects on prices in the United States. So the weaker dollar makes those goods coming in from overseas that much more expensive. We always see that in play. I think Scott Bessent and Jerome Powell are being economically, intellectually honest here in recognizing that, first of all, you can't do very often what you want to do for the domestic economy if you are trying to do something for the dollar, something in the global markets, for example, at the same time. You usually have to pick one perspective to determine policy. It's domestic, and that's what they're going to stick with. There's obviously a lot going on. I'm not sure how much of what is going on honestly reflects the fundamentals as I see it. This is still a very strong economy, and so it should, the dollar should not weaken this much.
Yeah, I mean, to your point on the inflationary effects of the U.S. dollar, we saw long-term Treasury yields actually move as the dollar was falling and actually move in the opposite direction as the dollar rebounded, right? I want to take you to the earlier point that you were making about this bifurcation in the U.S. economy as well, because we have seen the Fed now perhaps shift towards their focus on the stabilization of the job market, but that K-shaped economy that we continue to see in the U.S., how problematic could this be?
Well, it's very problematic from a political standpoint. It's problematic for monetarists, for the Federal Reserve, because it partially goes to the heart of what they feel they are there to do, which is to protect the general fabric of the U.S. economy, which is usually expressed in terms of inflation and employment, but it covers a number of other things. So I don't think they like necessarily what they're seeing there, but their tools are not tools that are designed to do something about many of these things. And so that's why I think there was, Jerome Powell correctly mentioned, well, it's understandable why, from a spending standpoint, we are seeing stronger spending in one sector of the economy, because that's a sector that tends to hold more stocks and bonds, more real estate. Those are areas where prices have gone up, and so they're spending it. But the fundamental problem of affordability and employment availability in certain sectors, that's a hard one for the Fed to address.
Jeanette, we got to leave it there for today, but it's always great to hear from you. Always learn something from our conversation. Jeanette Garretty, Chief Economist at Robertson Stephens. We have more ahead on the Asia Trade. This is Bloomberg.
Take a look at some of the big moves ahead of the market opens in South Korea, with Samsung and SK Hynix both gaining ground. Samsung just reporting a few minutes ago with fourth quarter net beating estimates. In fact, both of these companies reporting a very, very strong quarter, of course, all to do with their AI chips, not to mention, of course, the rise in memory prices. Let's bring in Asia equities reporter Sang-Mi Cha for more on these earnings, because Sang-Mi, we are seeing now the pre-market trading pointed to the upside, but these are stocks that have rallied already a lot, right? But we have more good news when it comes to the results.
That's right. Samsung's Samsung shares have actually doubled in 2025, and the shares have rallied 35% this month alone. And it's only been January for this year, and we're seeing this kind of rally. And it really reflects back to the earnings. It has reported that five-fold profit for this 3-month quarter, and we see similar patterns in SK Hynix earnings as well. But of course, it all goes back to that that shift in the customers of these memory makers. Once it was always the PCs or the smartphone makers who would actually delay their buys if the prices were not good. But now it's shifting entirely because of this AI boom that we're seeing. So their earnings actually really reflect the global AI consumption and the spending that we're seeing from the hyperscalers. Of course, and Citigroup has said that the DRAM and the NAND prices for this year is going to rise about 120% and 90% respectively. So that just really ties back to these earnings. And everybody says, well, if the share prices fall today, then not to be worried because the next quarter is going to be great again. So they're just piling into these two stocks.
So they're piling into these two stocks. Where does this leave the rest of the Korean market? And what are you watching when trading begins overall in South Korea?
Yeah, so overnight, of course, we had the SK Hynix earnings as well, and they have reported the strongest quarterly results. And again, everything has to do with HBM, the high bandwidth memory. That's the latest and advanced chips that is used for NVIDIA's AI accelerators. And of course, SK Hynix actually started off as the underdog in the space, but it has really paid off. Their bets on these HBM has paid off. And so we're seeing a little bit of that rare earnings call. The dual earnings call between SK Hynix and Samsung today. And it's going to be very interesting to see what they're going to talk about, how the rivalry between the two domestic companies in memory chips are going to play out. Of course, Samsung is coming up as a contender to SK Hynix's HBM strategy here. They're both vying for this HBM4, which is going to be the latest product that goes into NVIDIA's Rubin chips. So, and that all of this together does impact the Korean market. Korean market has rallied 25%, 26% this year alone, and that's adding to that 75% gains in 2025. So, and it's also been, we've been also seeing that broadening out of this rally from the bigger blue chip names to the small cap names because the government is mulling that KOSPI 5,000 milestone, which they hit. They're now mulling a KOSAC 3,000. So everybody's believing that could potentially happen. So we're seeing that broadening out of the rally. And this would definitely affect the Asia markets as well, the Asia tech stocks.
Yeah, especially here in Japan, because we're watching suppliers as we got ASML's results as well.
Yeah, so we saw that strange fall after that strong earnings from ASML, and of course the key stocks in focus would be LaserTech in Tokyo because they always move in tandem with the ASML stocks performance because they're again in that same EUV space. But I think we do not have to worry so much. It seems like Advantest, the testing company, has had a great. It's going to have a great earnings, and so that is going to have overall boost to the Japanese semis market or the tech market overall. And of course, Hynix and Samsung earnings are also going to boost some of these Japanese stocks. Not to mention the Philadelphia Semis Index have also gained overnight.
Sang-mi, much appreciated. Thanks so much for running us through what to expect when trading begins in the next hour in Japan and South Korea. Bloomberg Asia Equities reporter Sang-mi Cha. Now, more from the corporate front. Amazon is cutting 16,000 corporate jobs worldwide to trim bureaucracy and boost accountability. The company says U.S. employees will get 90 days to find another role inside the company, plus severance and transition support. Amazon's now announced 30,000 cuts in just 3 months as CEO Andy Jassy moves to trim management layers added during the pandemic. Volkswagen plans to boost exports of China-made cars to take advantage of low production costs. Its CEO says the company has begun shipping vehicles from China to the Middle East and Southeast Asia and is eyeing Africa and South America next. The German automaker is also cutting costs by shifting more R&D to China and partnering with Expo. Starbucks shares closed lower despite stronger than expected growth last quarter and a solid outlook for the year. Global same-store sales climbed 4%, beating estimates. CEO Brian Niccol told analysts the company has identified $2 billion in cost cuts as it works to streamline operations and improve service. Shery?
And we have breaking news here on the Bloomberg. We are now hearing from sources that Sony and Singapore's sovereign wealth fund, GIC, are forming a joint venture to acquire music copyrights with plans to invest $2 billion to $3 billion in the project. Now, this is a Bloomberg exclusive, and according to people with knowledge of the matter, Sony and Singapore's GIC are forming this joint venture. Sony's music division is one of the world's largest. It will manage the acquired catalogs, handling distribution to streaming services, and licensing older songs for use in films and commercials, according to the people speaking to Bloomberg. And GIC is providing capital and investment expertise. Now, this joint venture will give the Japanese company Sony the funds to build up its portfolio of songs. Now, with the deal, all three of the world's largest music companies have set up partnerships with financiers to help them acquire more rights to songs without having to provide all of the money themselves. We'll be watching Sony at the Open. We have more ahead on the Asia trade. This is Bloomberg.
Continuing to digest those big tech earnings, of course, coming into the session, it was about their capex, the spending on AI, and the extent in which they're seeing any form of payoff. So you're seeing that perhaps reflected in revenue for the likes of Meta and the extent in which this can play out in some of its ad-related products. Meta still retaining those gains of about 8%. IBM did quite well too. We are seeing Microsoft going the other direction. That sync is no thanks to those continued concerns, I guess, on the AI spending not quite paying off for the tech giant, Shery.
Yeah, we're watching also Tesla, especially with Elon Musk now saying that they plan to invest $2 billion into XAI and talking about how memory chips are more of a problem and constraint than AI chips, which has really led to those gains on Samsung, SK Hynix, as well as Samsung, their chip unit reporting a more than five-fold profit gain. They announced a $2.5 billion buyback as well. We have seen SK Hynix already coming out yesterday with their strongest quarterly results to date. And of course, that has led to gains broadly in the South Korean market. Take a look at how we're setting up, because the Nikkei is also showing futures gaining after two sessions of gains already, with the Japanese yen under pressure after some comments from Secretary Bessent. The market opens there. Next, this is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with plenty to watch, including U.S. tech earnings, Asia tech earnings, and of course, Avril, that very much expected rate hold from the Federal Reserve. Officials seem to be veering a little bit of their focus back on the stabilization of the job market.
Yeah, but investors are focusing on the back half of the year in terms of maybe expecting a dovish tilt from the central bank, and then perhaps anticipating what we can see from the next Fed chair. You're seeing that rally in gold as well, maybe a bit of that policy uncertainty coming through in markets too, Shery.
Yeah, trying to understand the uncertainties coming from the Trump administration, right? Especially when it comes to comments around the FX. We heard from Scott Bessent, for example, talking about that strong dollar policy and the fact that they're, quote, absolutely not intervening in the FX space in order to support the Japanese yen, which sent the currency just plunging in the overnight session. At the moment, we're gaining ground a little bit against the greenback at that 153 level. And you can see the Nikkei also under a little bit of pressure, down 0.2% after gaining for the past two sessions. And remember, here in Japan, we're also watching some of those suppliers, given that we also had some strong results coming from ASML. The JGB space also very important after that strong auction from the 40-year auction yesterday, which sort of sent a little bit of a sigh of relief for the JGB space after that meltdown last week. But take a look at how the Korean market is coming online, because remember, we are already at record highs, and then yesterday we got SK Hynix results that showed record quarterly results again, of course, on the back of HBM, advanced AI chip demand, not to mention also the memory prices are going up, and that's really leading to some of those companies to gain ground, including, of course, Samsung Electronics, that is gaining 1%. And we had the earnings earlier today, and really it's a beat across the board. We're talking about their operating profit gaining fivefold, and already this stock has gained more than 130% since September. And you can see the Kospi record highs again, and even the Korean won strengthening today.
Shery, we were just talking about the Fed and how things came in pretty much as expected. We now have a central bank decision out of the Lion City as well, Singapore's monetary authority. And we are seeing how they have left the slope, width and the center of the currency band all unchanged. This was projected by all but one of the 20 economists that were polled by Bloomberg. And we are seeing, interestingly, the MAS is seeing 2026 core inflation between 1% to 2%. They are also expecting to increase modestly in the near term, the core inflation trajectory, in that maybe this also signals a bit more concern about how sticky inflation is in the country. We have been seeing that in terms of food and transport to some extent. We are also watching out for the moves in the Sing dollar, because don't forget, this week we saw it hitting the strongest level against the greenback since 2014. Now, in terms of the forecast for growth, they have seen these risks to growth, and the inflation outlook also tilted to the upside. We are seeing the Sing dollar also pairing some of those gains after the central bank kept its policy setting unchanged. Now, let's take a look at how U.S. assets are faring in the early goings in terms of U.S. treasuries, because it was pretty much an anticipated move for the central bank. We were anticipating that they leave things unchanged. The question marks, though, about what they would say potentially about Fed independence and the trajectory of rates in the first half of the year. Powell did seem to not want to veer into that direction or lock himself into anything. And as some of our guests have been highlighting, really that conversation about how monetary policy can only do so much. Really the focus on fiscal policy, perhaps alleviating any cracks in the economy in the U.S. And given how we have been seeing that K-shaped trajectory in the world's largest economy, maybe that is something also for consideration. But investors have been betting on what we see from the Fed in the second half. And to that end, we've been seeing gold, perhaps on the expectations of the dovish pivot, topping yet more records past the 5,500 level. The dollar also reversing the gains that were sparked by Treasury Secretary Scott Bessent's comments. And we also heard from Powell. He had some words to say for his successor. Take a listen.
Economy expanded at a solid pace last year and is coming into 2026 on a firm footing. There was broad support on the committee for holding today. Broad. We will see the effects of tariffs flowing through goods prices, peaking and then starting to come down, assuming there are no new major tariff increases.
I'm wondering what advice you have for whoever your successor might be.
Stay out of elected politics.
Chair Powell also got a lot of questions around the impact of artificial intelligence and what that would mean for productivity in the future. Of course, given this AI demand and trade, we have seen some of these Korean names really rally across the board. Samsung's chip unit blew past expectations last quarter with a more than fivefold profit gain. Samsung's bidding to narrow the gap with Korean rival SK Hynix in next generation HBM4 memory also really taking hold. Let's bring in our Asia equities reporter Sang-mi Cha for more details. Sang-mi, so we had a bit more insight on the delivery of these advanced chips, but also Samsung seeing some of that windfall coming from memory prices.
That's right. Samsung's shares have doubled in their value in 2025, and we can already see in their share prices it's gaining again this morning, but it's up about 35% this month alone. And so it also showcases how it goes back to their semiconductor division having a great quarter and also expanding on some of those shortfall in DRAM and NAND that we have been talking about. The whole eyes are on the prices of these DRAM and NAND, which Citigroup predicts that is going to be hiked by 120% for DRAM and 90% for NAND, which is, we all need these memory, the conventional memory for our laptops, our smartphones. Now, all of this is happening because the customer base for Samsung and Hynix is changing. It was always these customers that goes back to the consumer electronics, but now it's the hyperscalers that actually power the global AI boom, and they have so much investments, and they're just all of these capacity is already booked, and so it's always also turning into some of these contract-based platforms. So in the past, it was always booked in terms of a quarterly basis, but now it's moving towards longer-term contracts, which is really a benefit for Samsung and the likes of SK Hynix. So all of this is going to be addressed at the rare dual earnings call today, where SK Hynix and Samsung are both going to be talking about precisely this.
I mean, the stocks, both of them right now early in the session, gaining ground, but it's been incredible to see the rally of SK Hynix as well. Those results we got yesterday.
SK Hynix actually had the strongest quarterly results last night, and all of this ties back to the high bandwidth memory. It started off with as an underdog with a lot of debts back in the days, but now it's actually become the leading supplier of these advanced HBM chips to NVIDIA's AI accelerators, and of course, some local media is saying that it is going to be an exclusive supplier to Microsoft as well. But of course, there are some variables coming. Now the latest is the HBM3E, but the HBM4 are the ones that Samsung and SK Hynix are both vying for. This is going to be the one that is going to be going into the NVIDIA's Rubin chips. That's going to be the next point of clash there. But of course, all of this is boosting the Korean market overall. Korean market, in terms of market cap, has overtaken that of Germany's yesterday. It's hit a $3 trillion stock market. And of course, that does not compare to the economy of that European country. But again, it is the stock market single-handedly just boosting the economy as well and the pockets of the people in South Korea.
What about Japan stocks, and how much of that focus is in some of the chip-related names following on from ASML? It reversed the initial surge in terms of trade.
Right. ASML's stock performance always ties back to the companies in Tokyo, the likes of Lasertech, because they're in the same EUV space. But again, Japan also is going to be looking at what the Advantest, the testing company, reports, because that is going to be a boost for the overall Japanese tech companies. And of course, the SK Hynix and Samsung's earnings are also going to be a confidence boost for the Tokyo stocks there. And also overnight, we have seen the Philadelphia Semis Index also rise. So that altogether is going to be boosting the Asian tech stocks here today.
Sang-mi, thank you so much. Our Bloomberg Asia Equities reporter, Sang-mi Cha. We have more ahead on the Asia trade. This is Bloomberg.
Right, we're watching Tesla's after-hour session after higher than expected profit for the fourth quarter. The company also saying that it needs to build a chip factory of its own as it's mapped out $20 billion worth of investment this year. The EV pioneer also revealing plans for those investments when it comes to XAI. Let's bring in our Tesla reporter, Dana Hull, with the latest. Dana, what were some of the key takeaways?
Yeah, it was a really interesting quarter. As usual, it's all about what Elon Musk says on the call. The big takeaway from the print was that Tesla is indeed investing $2 billion into XAI, another Elon Musk company. If you'll remember, shareholders kind of, this was something that came up at the shareholder meeting and was tabled. So to sort of get this announcement in the shareholder deck was not a huge surprise, but it was a big thing out of the deck today. And then on the call itself, they just talked a lot about big spends coming up in 2026, over $20 billion in capex, plans to build a solar cell manufacturing facility and a large chip fab. Elon Musk seems very worried about geopolitical risk, and Tesla needs a lot of chips. They want to have their own supply. He's always been a big fan of vertical integration. There wasn't many details about where this factory could be built and on what kind of timeline, but it is definitely something that they are apparently talking to banks about, and there'll be another announcement in the future.
How are investors taking to the idea that this investment will go from Tesla into XAI, $2 billion worth?
I think it depends on what kind of investor you are. I think that a lot of retail investors are very supportive of this. I think institutional investors might be a little more lukewarm, but obviously when you invest in Elon, you invest in his overlapping empire of 5 companies, and some people are probably very excited. I mean, AI is the hot sector right now that every company is making moves into.
And Dana, what do we know about repurposing some of their production facilities and perhaps the deliveries that we can see from the company going forward?
Well, the company is really, it's making it abundantly clear that it is not a traditional car maker. They announced also on the call today that they are sunsetting the Model S and X. These were the early models that Tesla first unveiled to the world back in 2012, 2013, 2014. Those vehicles are going to be sunset, and those production lines in Fremont, California are going to be turned over to Optimus robots. So you're really seeing this shift of the company away from traditional vehicle manufacturing and to robotics begin to happen here in Fremont. And they didn't give any kind of volume outlook. Going forward, they're really focused on robotaxi and transportation as a service.
Dana, great to have you breaking things down for us. Much appreciated. Our Bloomberg senior reporter, Dana Hull. Now, the AI outlook's in focus as we get the first big tech earnings for the quarter, of course, and we've been seeing Microsoft shares falling in late trade after it reported record spending while noting slowing cloud growth. Investors were also more positive on Meta's AI spending increase as its quarterly revenue forecast topped projections. Then we also had IBM gaining as sales beat estimates. Joining us now for analysis on the markets, David Chao, global market strategist at Invesco. David, good to see you. So do you think there has been enough in these earnings releases from the big U.S. tech names to keep the tech bulls happy?
Well, I think that what we've seen so far has been quite encouraging, that not only tech companies are reporting strong and resilient earnings, but we're seeing tech companies also branch out into new sectors. For example, like Tesla into robotics. I think that will be enough as continued demand for high-tech manufacturing continues to boost demand for tech-related products and services.
How much of a problem might the memory shortage be for some of these tech names? I mean, Elon Musk himself raising it as a sort of issue.
Well, I think both memory and also services, semiconductor services are very in-demand types of areas of tech. going forward. And I think that a lot of investment is looking at those related sectors. I think that the memory shortage right now is going to be just a near-term blip as capital pivots to that area, and that we can probably see some amelioration, some improvement later on in this year in memory.
At least for now, though, when it comes to some of these stocks like Samsung, SK Hynix, can we expect more upside for the time being given the demand?
I think so. I think that the future of a lot of AI-related services, AI-related apps, AI-related products could be using lower-end semiconductor chips, which Samsung, which Hynix manufactures, compared to some of the other higher-end chips. I think that the demand for lower-end semiconductor chips for AI continues to be quite robust, and that's where a lot of the demand is going to come in the future.
Given that now we have gotten the very much anticipated decision from the Federal Reserve on that rate hold, is it safe to assume that the narrative when it comes to Asian markets will now move towards the earnings season, towards the tech rally? How much are you looking at the gyrations in the FX space, given everything that the Trump administration is saying around the dollar as well?
Well, I think that dollar is still likely to weaken, even though we did not get that Fed rate cut. Dollar remains expensive relative to a basket of currencies, especially a basket of Asian currencies. This could mean that some Asian banks are on hold because the Fed did not give the cut this time around. But we have to assume that we're in a better position in Asia because this part of the region does not have continued elevated levels of inflation, which means that Asian banks still have the luxury of cutting rates. Perhaps maybe not as many rate cuts as we originally expected for this year, but I think this region still is in a rate easing cycle, which should be supportive of equities.
Yet we got at the top of this hour from Singapore Central Bank, they are raising, or at least they're seeing a bit of upside risk when it comes to both growth and inflation. You know, what are the risks involved here when it comes to the prices in these various countries, as we see perhaps stickiness when it comes to some of these inflation factors?
Well, I think for Singapore, it's not an inflation issue there. Growth is much better than expected. The IMF forecasted growth at the end of last year for Singapore to be in the 2%. But Singapore's GDP came in double that, in the 4% range. So I think that Singapore's economy is reflating. Yet we're not seeing the inflationary impulses that normally come with that. But we're certainly keeping an eye on that. Overall, the Asian economy is reflating due to things like monetary stimulus and also fiscal stimulus in places like Japan. So I think that we're in an environment where equities are preferred over fixed income because as economies reflate, stocks tend to do well. But I also think that gold could continue to do well in this reflationary environment.
David, can we ask you a bit more specifically what you're watching in Southeast Asia aside from Singapore? I mean, just a day ago, we saw how the MSCI fired a sort of warning shot on the Indonesian market. Then we saw a steep decline. Today, we're hearing how Goldman is downgrading Indonesian stocks. I mean, how do you view EM Southeast Asia?
I think that there's too much pessimism around Indonesia. I think that Indonesia looks very interesting, given where valuations are. Valuations are rock bottom levels, compared to other parts of Asia. And I think that there are pockets of opportunity in Southeast Asia, and especially in Indonesia. Indonesia has quite a diversified economy, built both on cyclicals, mining, consumer staples, consumer spending. I think that as the Asian economy starts to reflate, you want to be long those economies that are most cyclically adjusted. And I think Southeast Asia and Indonesia is a good example of a very cyclical-oriented economy that should be a beneficiary as growth improves. The global economy is shifting from kind of a mid-cycle slowdown to a bit of a recovery this year, driven by easing monetary policies and also more fiscal stimulus around the region. And cyclicals should be one of the biggest beneficiaries.
Okay. What about the dynamic between some of these EM markets and the dollar slump? How much is that also perhaps providing another sort of fuel?
Well, if I look at data back to 1974, assets that do well when dollar is weakening, MSCI emerging markets is the best performer when dollar is weakening, followed by non-US developed markets like Europe and Japan. So dollar weakening is a very integral component of our thesis that emerging markets could outperform US markets this year. And so when we think of instances where EM has outperformed US, and there hasn't been that many instances over the past 15 years, but we look at a trifecta of reasons. The dollar has to be weakening, local central banks have to be cutting rates, and also oil has to be under $80 a barrel. And so I think that trifecta has been reached, which is why I think emerging markets could have a pretty good year.
David Chao, always good to have you with us, global market strategist there at Invesco. And take a look at some of the big moves that we're seeing in the Asian session today, especially here in Japan. Advantest surging after they reported a jump of about beat on earnings estimates, and they raised their forecasts as well. This is a chip equipment maker here in Japan, and their operating income came in at $744 million, topping analyst estimates. They sell equipment that can identify defects in advanced chips. So you can see the rally there, which topped 14% at one point. They also have customers like Samsung Electronics. They get about 11% of their revenue from Samsung. And remember, Samsung had strong earnings this morning as well. You have other companies like Lasertec, Tokyo Electron, which are closely related to ASML, losing ground. ASML had strong earnings, but investors kept pressing executives on the outlook. Despite that, right now, bookings look okay. We have more ahead on the Asia trade. This is Bloomberg.
President Trump has warned Iran to make a nuclear deal with the U.S. or face military strikes even worse than last year's. In a social media post, Trump says the fleet he's ordered to the region, led by an aircraft carrier, is ready to fulfill its mission with speed and violence if necessary. Iran's UN mission responded on X, warning if pushed, the country will defend itself and respond like never before. And certainly, those geopolitical concerns are playing out in oil prices hitting a 4-month high. Also, perhaps propelling the precious metals, including gold, but partially to do with this climb with the debasement trade and the expectations that we see a dovish Fed in the second half of the year. Silver, not to be outdone, also near those record highs. More ahead on the Asia trade. This is Bloomberg.
Big moves in tech today. We had those giants in the United States, the first of America's 4 biggest AI spenders, reporting. And it was really all about that AI spending. We're talking about Microsoft being pressured because of that record surge to that record high when it came to spending, cloud sales growth slowing down. We had Meta, though, rising in the after-hours session. Strong forecast, AI investments also that could go up to $135 billion. IBM also coming out with revenue that topped estimates. And where are they going to spend all of that money for that AI demand? Well, a lot of them, of course, is to do with Samsung, SK Hynix, that are supplying the chips, the advanced chips necessary to power artificial intelligence. We had strong results coming from Samsung, their chip unit reporting a more than 5-fold profit gain. They also announced a $2.5 billion buyback. SK Hynix talking in earnings right now, saying that DRAM NAND inventory is projected to decline further. Remember, this attention away towards AI and away from conventional chips is leading to the cannibalization of production in DRAM and NAND. And that's another concern when it comes to memory pricing, something that even Tesla's Elon Musk mentioned was a concern. Let's discuss all of this with Wei Sun, principal AI analyst at Counterpoint Research. Wei, great to have you with us. So it seems that the new narrative right now around chips, moving away a little bit from HBM4 and into the fact that conventional memory is an issue.
Yes, I think it's very interesting because, the memory chips, there were smartphones that have the high demand of that. And now the AI data centers are also doing this kind of, high demands. And it's not a temporary trend. I think it's going to go through the whole year, maybe the next year as well.
Who are the winners and losers in this new environment?
I think definitely if we look at the AI giants, right, they're spending billions of money on the capex and the investment in AI data centers and the chips. So they are doing a strong forecasting of the revenues. At the same time, they are kind of doing a huge layoffs on, let's say, Amazon these couple of days to reduce the operational expenses. So I think they're doing their own adjustment and will be a winner in the age of AI because some of them have the very advanced AI models to be, the fundamental layer that will give a global supply to different kinds of applications.
It's also about the supply of chips. And we know how China has been trying to secure its own really advanced AI chips or come up with its own. What do you think China's strategy is here, and how will that influence investments there?
I think China is definitely have been, creating this kind of a self-sufficiency plan on chips. And as far as we know, it's chips toward to the training and the chips toward to the inference stages. And I think China is very good at catching up with the chip development and in terms of the inference. So for the application side, it has the native local alternative suppliers coming up and being pressures to develop more and more cutting-edge chips. But still, NVIDIA remains as a very competitive, offering suppliers in terms of having this H200 chips being green-lighted again to China. So it's a very dynamic a balance that shifts, from moments to moments. And right now, it's the tug of war is still on the high. Yeah.
Where are we in the China and the Asia chip cycle?
I think it's still developing very rapidly and catching up. But it's still lagging in terms of the most cutting-edge chips. Let's talk about NVIDIA's, Blackwell, and also the coming out Rubin this year. It's much more powerful. We're talking about, 3 times to 15 times, fold more advanced, more performance than China's alternative offerings. So I think it's still in the catching-up phase, but it's changing very fast.
We do have NVIDIA's earnings coming out in about a month. February 25 is the date that we're watching. But when it comes to the opening, perhaps, of the Chinese market, whether it's with these less advanced H200 chips, what does that mean for this company?
I think it means significantly for NVIDIA, especially when it was dropped from 95% to 0. After the ban, and right now it's giving a little bit of a leak into the Chinese market, and we expect it to go back to 10 to 25% of the market share, given the circumstances. So yeah, it means a huge revenues coming into the NVIDIA's earnings and forecast, and that's not it's not a temporary thing; it's an ongoing thing. Yeah.
What will be the effect and the trickle down to Asian suppliers?
I think the plus side is now the competition is more intense, and then there are pressures to make more and more advancements and cutting edge products. And the downside is because the competition is fierce, so they're facing a lot of uncertainties in terms of how to overcome these challenges in technical research and development to come up with a very increasing market share and competitive products in the future.
You touched on some of this earlier. If we see NVIDIA's re-entry into China, how exactly do you think it will coexist with the existing Chinese products?
Yeah, this is actually a very tricky part from, how does it really happening, from adoption point of view. But I think China is very application-driven market. So as long as there's a great products and it's accessible, it's available, and there will be a huge demand for that, and it will be allocated wisely and sufficiently. Yeah.
Wei-Sun, thank you so much for your analysis and your time today. Wei-Sun is Principal Analyst at Counterpoint Research. Now, here are some of the top corporate stories we're tracking. IBM shares jumped in after-hours trading as it reported quarterly sales that beat analyst expectations on strong growth in its software unit. Sales climbed 12% in the quarter, with software accounting for the biggest proportion of revenue. Investors are enthusiastic about IBM's strategy to target high-growth software through acquisitions. Amazon cutting 16,000 corporate jobs worldwide to trim bureaucracy and boost accountability. The company says U.S. employees will get 90 days to find another role inside the company, plus severance and transition support. Amazon's now announced 30,000 cuts in just 3 months as CEO Andy Jassy moves to trim management layers added during the pandemic. Volkswagen plans to boost exports of China-made cars to take advantage of low production costs. Its CEO says the company has begun shipping vehicles from China to the Middle East and Southeast Asia and is eyeing Africa and South America next. The German automaker is also cutting costs by shifting more R&D to China and partnering with XPeng. Starbucks shares closed lower despite stronger than expected growth last quarter and a solid outlook for the year. Global same-store sales climbed 4%, beating estimates. Its CEO told analysts the company has identified $2 billion in cost cuts as it works to streamline operations and improve service. Shery?
Yeah, take a look at how Korean stocks are trading at the moment, because we are seeing a little bit of a reversal for the Kospi, with some local funds selling at the moment. As we hear it, also the finance minister speaking, saying that he wants to strengthen the Kosdaq market competitiveness is still in the green. We have seen significant upside for the tech-heavy, more small caps Kosdaq index in recent days, which reached a new high that we haven't seen since 2000 or so. We continue to follow the latest earnings call from SK Hynix. They've been talking about their DRAM NAND inventory as the memory business, and the pricing continues to go up. They say that the inventory is projected to decline further and that they will maximize production to meet surging demand. Of course, this coming after they reported record quarterly earnings just yesterday. We have more ahead on the Asia trade. This is Bloomberg.
There's just a lot of uncertainty, and really, in some respects, it feels like the Fed's job is actually quite easy, because you're looking at a pretty strong growth trajectory. We know somewhat where inflation is. The markets are extremely confused.
Right now, things look pretty good. On Monday, I said that the yield curve looked about as perfectly priced as you could have it. So does the bond market. It seems to incorporate reasonably good economic activity this year. It seems to incorporate what we think could be disinflationary forces coming from both the headwinds of tariffs on spending and also the impact of AI.
I think the big takeaway on the policy side was the removal of the balance of risks from the labor market assessment.
I think it's a Fed that is comfortable with the backdrop of data, which I think is the right call. The data seem to be improving from here. We actually think that it will continue to get better, in which case this will certainly be the last cut under Chair Powell. There's no more cuts under Chair Powell. He's done.
Bloomberg TV guests on the Fed's decision to hold rates now, taking a look at what we're seeing in FX. The dollar's reboot didn't last very long. You're seeing it lower on the Bloomberg Dollar Index, despite those comments from the Treasury Secretary as well. And in terms of the EM currencies, this gauge shows you it is at those record highs. There is a bit of strength creeping into the likes of the Korean won. Even the Japanese yen is catching a bit. Let's get more on the swings in the dollar. And Bloomberg FX and rate strategist David Finnerty joins us now. So David, what are you watching next in terms of Asia currencies and how the dollar has, gone back to these declines? How does that play into what we're seeing in the region?
Yeah, as you said, it's quite interesting that the dollar had that bounce after Scott Bessent's policy, but that didn't last long at all, at least in terms of Asia. We'll see what London makes of it as well when they get in. But I think the idea is certainly at the moment is, should we say with traders, they say the trend is your friend, and they're quite happy to find excuses to sell the dollar if they're given any. And I think the general sentiment at the moment in the market with Asian currencies or G10 currencies is that the dollar is headed lower, maybe a gradual decline, but the dollar is headed lower. So if they get a chance to put on short dollar trades, they're quite happy to do so.
Mm-hmm. How should we be taking Secretary Bessent's comments on that a strong dollar policy from the U.S.?
Yeah, I think initially you got that knee-jerk move higher because whenever you hear the word strong dollar, you go, oh, he means a stronger dollar versus other currencies. But if you look at the nuance, that's not quite what he says. Actually, yesterday he just said, look, first, basically the fundamentals really of the US economy. And if you go back what he said on Bloomberg July last year, he said the price of a dollar has nothing to do with a strong dollar policy. It is more to do with, will the dollar be the main reserve currency of the world? And will the long-term policies support that? So really, he is saying, look, don't get the two confused. When I say a strong dollar policy, I don't necessarily mean a strong dollar itself. I just mean that we remain the main reserve currency, which of course at the moment it is. But if that's the case, then you're going, well, okay, you've got this knee-jerk reaction higher dollar, but really saying if the dollar goes lower, that's okay. And of course, that's what President Trump has indicated earlier this year, and again, earlier this week, and hence it's quite emboldening traders to say, well, we're looking for a shorter dollar or reason to short the dollar, and we are getting them.
If that's the case, should markets be concerned also about the impact on inflationary pressures in the U.S., especially given that we're seeing also the reaction in long-term treasuries?
Yeah, there obviously is a correlation. If the dollar gets weaker, then that is inflation, because you import inflation. So that is not a positive. Again, the speed of a dollar decline would be very important. But it is interesting to note that the treasuries beforehand sort of were shrugging off any dollar moves. But this week, there's a bit more of a correlation between dollar goes down, long-term yields have been drifting higher, and vice versa. So if the dollar was to continue to weaken, it would be interesting to see if that correlation continues, which would mean higher yields in the US, certainly at the longer end of the curve.
Who do you think among the Asia FX, or specifically in Southeast Asia, which are the ones that you think are going to outperform this year? I mean, we're seeing strength in the ringgit coming back, Sing dollar as well, doing well.
Sing dollar is certainly doing well, and the MAS policy today was basically on hold, but they did sort of set up a potential tightening of the exchange rate policy later this year. Malaysian ringgit's obviously done well this year. Certainly in the G10 space, you'd have to be looking at the Aussie dollar and Kiwi. The reason being that two central banks in those countries are expected to actually raise interest rates this year, with basically the RBA is a good chance, 70% chance the market's saying it may raise interest rates next week. So you've got a divergence in monetary policies there. So in the G10 space, those are the two currencies that sort of stand out. But in the EM space, Singapore dollar's doing quite well, and Malaysian ringgit has been performing well as well.
Yeah, carry trades have been in focus lately. David Finnerty, great to have you with us, Bloomberg FX and rate strategist, as we continue to take a look at some of the assets, especially after we saw the U.S. stock market sort of fading with the Fed's rate announcement. Earlier, we had seen a tech-led rally driving the S&P 500 briefly above 7,000. And you can see futures at the moment not doing much. But this, of course, as we continue to digest the first of America's four biggest AI spenders, Microsoft, Meta having reported earnings, and we saw the downside on Microsoft because of that record spending on artificial intelligence. Treasuries didn't really budge in the overnight session, but we continue to watch the implications for the yield curve, especially given that the Fed seems to be a little bit more focused on the stabilization of the job market. And perhaps also in focus has been who voted how, because we had two dovish dissents, and one of them, Avril, came from Governor Christopher Waller, who we know is one of the people who may be in the running to become the next Fed chair. Now, this is a four-way race, and Christopher Waller voted for a rate cut of 1/4 point that might sit well with President Trump that wants easier policies. So we are now seeing his odds, according to market bets, going up when it comes to becoming the next Fed chair when Powell leaves his post in May. But the caveat is that he has kept a consistent messaging when it comes to the deterioration of the U.S. job market. And he already voted to dissent for a cut back in July with Michelle Bowman as well.
Yeah, you mentioned how this is a four-horse race. It's also not just Waller. We have the two Kevins, and then the likes of Rick Rieder, right, now one of the finalists as well, to perhaps lead the Fed next. And it's interesting, against this backdrop, there's been so much scrutiny about the background of every individual. We're hearing how he has donated to some of Trump's most prominent political rivals and Democratic leaders. So some see this as perhaps a fresh test, given how the U.S. president does tend to have a tendency to surround himself with loyalists. Now, we are also hearing from the likes of Powell weighing in on all this. Have a listen.
And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics.
More ahead on the Asia trade. This is Bloomberg.
Take a look at how European futures are looking after the Fed kept the rate on hold as pretty much expected, and we saw the dollar gaining ground at one point. You can see the euro at the moment gaining slightly. It had fallen immediately after the Fed decision from the strongest level since 2021, but you can see the pound also holding pretty steady while Euro Stoxx 50 futures are not really doing much. This as we continue to follow this ongoing trip by UK Prime Minister Keir Starmer, who's promising to seek a more mature relationship with China ahead of Thursday's talks in Beijing with President Xi Jinping. Let's bring in our China correspondent, Min Lo. And the Prime Minister seemed pretty confident that he wouldn't have to choose between China and the U.S. But what's the tone that we're expecting from Starmer in Beijing?
Yeah, so he arrived late afternoon yesterday and he set a pretty positive tone right from the get-go. One of his first remarks was to the delegation that was accompanying him. He spoke at the lobby of his hotel, telling the delegation that they are part of a historic time here participating in this change that he's embarking on. He has said that he wants to end this ice age in UK-China relations. As you said, the first trip in 8 years for a British Prime Minister to visit China. And he has acknowledged some of the national security threats that China poses, but said that UK needs to be responsible in making an outreach to China. And he's trying to balance this two-pronged approach of trying to find areas of cooperation, especially on the economic front, especially as the UK is grappling with a GDP that is shrinking and growing inflation as well.
And then with all these visits, what we want to see, of course, is concrete outcomes. How much is that expected?
We'll certainly be looking out for the size and scope of any deals. Experts are not expecting anything that would be as extensive as a free trade deal, given President Trump's potential response or retaliation to that. But we know that Starmer has brought with him a delegation that is 60 men strong, leaders from many different sectors, from the financial industry to the medical industry to automobiles, aviation as well. We know already that one of the UK's largest power company is looking to sign a strategic partnership with a Chinese power company that is expected to be signed during Keir Starmer's trip, and it will mark a major entry into an industry that for a long time has been tightly regulated. So yes, Keir Starmer would be looking for more market access in areas like financial services, medical services. There are also, of course, other thorny issues, right, like China's role in the Ukraine war, as well as the Taiwan issue, securing Jimmy Lai's release, human rights issues. But some of these points of contention perhaps are increasingly being seen as perhaps a performative ritual that are not likely to yield concrete outcomes. Another symbolic move could be also visa-free travel for British citizens. That is something also to look out for if the Chinese do announce that.
Min Min, thank you so much. Our Bloomberg China correspondent, Min Min Lo. Now, some of the stocks in focus when markets open in Hong Kong and mainland China. Here's a look at them. Watching the chip makers after blockbuster results from Samsung and SK Hynix fueled by strong AI demand. Samsung posting that more than fivefold jump in profit, and then SK Hynix also delivering its strongest quarterly results on record. We are also seeing Greater China futures pointing in this direction. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.